and Happy New Year, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, January 2nd, 2023, and I am pre-recording this Trading Places Live for Tuesday, January 3rd. We still have quite a ways to go before we get to the opening bell, but currently we do show futures up slightly. Dow Jones futures up about 40, S&P 500 futures up about 4 or 5 points, and the NASDAQ futures are up about 9 points. So it looks like we'll possibly get off to a decent start as we open up a new year. But again, things can change overnight, so we'll see how things progress. Excuse me. Let me first go through today's agenda to start the year. So first things first, we will take a look at the daily market recap. This will be a little special one. Take a look back really throughout 2022. So we're going to bring the whole year into focus going through that recap. Then we'll get into talking technically, just take a quick look at the S&P 500 and the NASDAQ as we start the new year. Another segment, best and worst of 2022. I'll go through some of the major indices, sectors, industries, and just pull up the best and the worst of 2022. Then I want to talk a little bit about MarketVision 2023, which will be held this Saturday, January 7th. This is our 4th annual event. I will talk a little bit about it throughout the show. Then we'll get into the earnings spotlight, and we will wrap up with our very first 3 you must see. I'm going to give you 3 Dow component stocks that I think could have big years in 2023. We'll see. Anyhow, we're going to get to all that in just a moment. I do want to take you over to earningsbeats.com. Just want to make sure any of those of you that are new or who have not already signed up, we do have a free newsletter, our Earnings Beats Digest. Name and email address is all it takes. It is a free newsletter. Hit that subscribe button. No credit card required. You can unsubscribe at any time. Really try to make it very, very educational and hopefully provide some trading opportunities along the way, although that's completely up to you whether or not you want to trade anything that we talk about. But it is something I think that can help you with your trading in 2023. Also, the MarketVision event, as I mentioned, that will be Saturday, January 7th. I'll talk more about that later in the show. Let's go ahead and move on to the daily market recap. And you're going to see I got a lot of charts on here. I'm not going to go over each one of these in detail, but I wanted to show you a couple things. One thing that is different, if you followed my show, is that I have the entire year 2022. So we got the Dow Jones, S&P, NASDAQ, mid caps, small caps. And this is what happened. I mean, the Dow obviously was under a lot of pressure through the early part of October, but it had rallied back very nicely into the beginning of December. And then the market took a little bit of a hit in December, but still kind of in the middle of the range of where we were during the year. So not bad. The S&P 500 down also into early October, rebounded. Their rebound was not quite as strong. The way you can tell is just look at the high back in August. Look at the early December high on the Dow. We took that out. On the S&P, we did not. The NASDAQ, we never get even close. Tremendous underperformance in the NASDAQ, especially in the fourth quarter. That's something we're going to have to deal with in the early part of 2023. We either need the NASDAQ to bounce back. And by the way, January, since the 1970s, January has been the best month of the year for the NASDAQ stock. So there's going to be a test. We're going to see how well the technology and consumer discretionary and communication services, we're going to see how well those groups handle this month, whether we can get off to a good start. There's also a January effect. A lot of folks may not be aware of this, something I follow very closely. The fact that we had such a rough January last year told us under the January effect that we shouldn't have been expecting much for the balance of the year. Typically, when you have one of the worst Januaries of all time, that's normally going to end up costing you throughout the balance of the year. Normally, the market doesn't just come bouncing back. It has happened on occasion. This isn't a perfect system, but January does act as a pretty good barometer for the balance of the year. So I'm going to be very interested to see how we start out January of 2023. Then we got the mid caps, small caps, all trending lower. All of our major indices, for the most part, trending lower throughout the year. I do want to point out, though, look at the AD lines. This is different than what we have seen during secular bear markets. Secular bear markets, the AD line holds up for a while, but then rolls over and takes a dive. We're not seeing that yet. So I think that's at least one positive to take away. There haven't been a whole lot in 2022, but that I would say is one of them. Looking at the sectors, I have these, excuse me. I have these in performance order for the year. So this is not performance order from the end of last week, last Friday. Instead, this is how they performed throughout the year. So energy was your top performer. Utilities finished up slightly, second best performer. Staples were fairly flat, down just a tad. And then there was healthcare, industrials, financials, materials, real estate. And the bottom three, we don't like to see this: technology, discretionary, communication services. That needs to change. These groups did not look good into the end of the year. Technology kind of went along for the ride in the fourth quarter, went up, but you can see discretionary went down. Communication services struggled. So not a good look there at the end of the year. And I apologize. I do been struggling with a cold over the weekend, so I'm trying. Hopefully my voice will hold out throughout this show, but I do apologize for it. Hopefully I'll feel a little bit better later in the week. Anyhow, looking at the industry groups, coal, best performer in 2022. The one of the oil groups, integrated gas and oil, or oil and gas, you can see very, very strong throughout 2022. These were your two best groups. The two worst, automobiles, they were just horrible, especially in the fourth quarter. Tesla, Rivian, Lucid, I mean, across the board, just a lot of weakness in the auto group in the fourth quarter. I think some of it we're going to find out with earnings reports. I think it could be supply chain related. Just a general slowdown in the economy. I think, when you start talking about electric vehicles, they're very expensive. So if the economy is seen to be weakening, this is a group that you would think maybe would be left behind, and it was. Also tires, maybe kind of going along that automobile theme, but the tire group also hit very hard in 2022. Those were your two worst groups. All right, let's move on to the 10-year Treasury yield. So here's your 1-year look at the Treasury yield, which was rising throughout the year. Personally, I think this was one of the biggest problems with the market is, and I'm a former practicing CPA, when rates are going up, valuations go down. If everything else stays the same, rising rates will drive down valuations. It makes future earnings less valuable. So anytime rates go up, that's going to be a headwind for the stock market from a valuation perspective. Now, if rates are going up because the economy is strengthening, it doesn't necessarily have to be a bad thing, because the stronger economy can increase profits, and profit growth can accelerate faster than the rates. So if that's the case, then we can actually see the stock market do well when rates are going up. That was not the case in 2022. We had 2 negative GDP readings during 2022. The economy was softening, whether you want to call it a recession in 2022 or not. I know by the technical definition the government now uses, it was not. But when I look at GDP, if it's contracting, which it did for 2 straight months, it's not a good thing. I mean, call it whatever you want to call it. So the rates were not going up. Folks were not selling bonds because they wanted to get into stocks. They were selling bonds because number one, the economy did not look very good. And number two, we've got inflation. We had inflation issues to deal with. Rising rates to deal with inflation, not good for the stock market. And that's part of what we had in 2022. Now, you can see rates did decline in the last couple of months of the year, right before maybe we had this little pop in the last 2 weeks. But in the fourth quarter, we did see rates coming back down. We saw the Dow move higher, the S&P moved higher to a lesser degree. But surprisingly, the lower rates didn't really trigger much in terms of gains in the NASDAQ. I'll talk about that more in just a bit. Let's move on and do some talking technically. So I wanted to look at the S&P 500 and just show you where I think we are right now. Now, those of you who followed me all year long know that at MarketVision 2022 last year, I was extremely cautious. I would have been outright bearish, but the price action was at an all-time high. You can't be bearish when the price action is an all-time high. However, there were a lot of signals saying it would not last. So the only thing I needed was price confirmation and a move lower. And we got that big time in January. So the year went pretty much according to plan. Back at MarketVision 2022, I said the first half of the year, we could see a 20 to 25% drop. I gave a potential target on the S&P 500 back on January 8th. We were up here at 4,700. I said we could go to 3,500 to 3,800. That was my range to the downside. On June 16th, again, if you were following me throughout the year, I called a market bottom. You can go into YouTube and pull up the video. Just search market bottom. I'm sure you'll see my video come up. I got a lot of heckling over that video. Still, to this day, folks don't agree with me and, think that, some of the comments I'm getting, I would think that the market's gone down another 1,000 points. But, after calling that bottom, we did have a few handful of days where we went below that low. So I can't say I was technically correct. But where'd we finish the year? 38.39. We were at 36.36 when I made my call. 200 points higher from June, 6.5 months later. Where's the big drop? Still waiting. Had a lot of bad stuff, a lot of bad news, a lot of bad press. Media's been all over everything. Seen a lot of gap downs. We've also seen a lot of recoveries during the day, which is why those AD lines are as strong as they are. I'll be talking about that this Saturday at MarketVision 2023. You're not going to want to miss that. Anyhow, S&P 500 is rebounded. Now, has it taken off? No. And I really thought we were going to have a stronger second half of the year, especially fourth quarter. Now, we did move up in the fourth quarter, but with rates coming down, I absolutely expected some of the growth stocks to have big fourth quarters, and they did not. So that was a call. Now, again, that was a year in advance, but that was a call that did not come to fruition at the end of the year. We'll see what happens in 2023. But anyhow, I think the fourth quarter, we've rallied. We did pull back a little bit in December. I think we're poised to go higher. But January will give us a lot of clues about the year. I really believe that. And I'm open. If we come out of the chute in the first few weeks, heading into earnings season, and as earnings come out, we can't do anything to the upside and we move lower, that is probably going to be an indication that 2023 may be another rough year. I don't know. I'll talk about more of that on Saturday. NASDAQ 100, this is the bigger concern for me, not the S&P. Because when you've got poor performance by stocks like Apple, Tesla, Amazon, NVIDIA, these are big market cap companies that drive the S&P 500. And when they are struggling, and the S&P 500 still goes higher, what does that tell you? It tells me that money is not leaving the market. Money is rotating into other areas of the S&P 500. That is more bullish behavior than bearish. Yes, the growth stocks have been bearish. No doubt about it. I admit it. I thought they would be doing much better. But the fact that they are doing so poorly, and they're the most heavily weighted stocks in the S&P 500, and the S&P 500 is still 300 points above the low in October, tells me that money is not leaving the market. Those folks that are selling the Apples and the Amazons and the Teslas and the Nvidias are buying many of the blue chip companies on the Dow. They're putting that money to use in other equities. Folks, if you're in a bear market and you're preparing for a big decline, you don't buy anything in the US stock market. Right now, money is rotating. That is a bullish signal. Even though it's not rotating to growth, the money is not leaving the equity market. NASDAQ 100. Since we saw the gap up with the November CPI data that came out, which was cooler than expected, we have gone pretty much straight down. Will we break below the October low? I don't think we will, but this group is really underperforming. If the January seasonality can't pick this group up and we're still flirting with the low or we've taken out the low, I think that's going to be a pretty poor signal for the growth stocks in 2023. All right, best and worst of 2022. I'm going to go through these pretty quickly. The Dow, best stock in the Dow, Chevron. CVX, you can see it over here, bottom left to top right. That's the way you always want your stocks to go. $113 beginning of the year, finished near 180. Really, really good year for Chevron. Worst Dow stock, Salesforce.com. Top left to bottom right. That's the opposite of what we just looked at with Chevron. That is not good. So we were up, I don't know, probably dropped close to 50% this year on Salesforce. And I looked at this one on a long-term chart. Don't like this at all. 15-year monthly chart. Notice one thing. Sorry. Notice one thing here. The 20-month EMA has been above the 50-month SMA all 15 years until we just crossed below it. Now, listen, these companies can bounce back, but technically that is not a good look at all. Salesforce has a lot of work to do as we start 2023. It's not one that I would be in favor of at this point. Now, Salesforce has a great long-term track record. If it can get back up above its moving averages, then I think we got a different ball game. Until that, though, I think we have to be very careful with Salesforce. All right, how about the S&P 500? Best stock? It's another energy name. It's Occidental Petroleum. And let's go back to that relative chart. So most of the gains here were in the first 5 months of the year. Since then, we've just been consolidating, going sideways. But, you know, the market's been pretty choppy. So there's really nothing bad on this chart. I think as long as we continue to hold about $54, $55 on Oxy, I think we're fine. I think we're just going through a lengthy period of consolidation. And after an uptrend, usually that breaks to the upside. We'll see in 2023. Worst S&P 500 performer, GNRC Generac Holdings. Now, here, the AD line's been horrible, although it has just started to pick back up again. Look at the price action. Again, top left, bottom right. That's not what you want to see. Big, big drop here. Dropped about 2/3, maybe a little bit more, maybe 70, 75% of the market value gone in 2022. How about the NASDAQ 100 best stock? It's a renewable energy stock, Enphase Energy. Again, mostly lower left, upper right. Got to watch maybe this support area around 235 to 240. I think as long as that holds, Enphase looks pretty good. The worst performer, talked about the autos. I mentioned Lucid. Look at Lucid. Stock was up in the mid to upper 40s beginning of the year. Closed the year at $6.83. I think that was like an 85% drop during the year. Really, really awful year for Lucid. And it continues to trend lower. I mean, this, I guess, is the poster child for why bottom fishing can be so dangerous. Because you get a stock up to 40, and that first pullback, I mean, you get down to 30, you're probably thinking, how much lower can it go, right? It's a great stock, great long-term future. Probably can't go much below 30. Here we are at $6.83, $6.83. All right, we talked earlier, best sector, XLE, bottom left, upper right, nice uptrend. Worst sector, the other way, communication services, upper left, lower right, trending down. Still got a lot of work to do here. Best industry group, coal. And there you see the uptrend and sideways consolidation. The worst, well, you just looked at Lucid. Well, here's the industry group, autos. Really, really pitiful. Started the year 1,500, finished the year under 500. Big, big drop for automobiles. So anyway, that is your best and worst of 2022. So let's talk a little bit about MarketVision 2023. I'll show you in just a couple minutes how you can get more information on it. But I can tell you that this is the fourth one we've done. It's a free event, free virtual event. Even if you can't make it live, if you register, you will get a recording, copy of the recording. You can look at it whenever. You can hold it until the end of the year. And if all my, predictions are horrible, let me know. Same goes with anyone that is going to be there. I do have some good friends of mine, colleagues at StockCharts that will be joining me. Joyous to Kempinar, if you're familiar with the relative rotation graphs, RRGs. Joyous is the founder of the relative rotation graphs. I'm sure he's going to give you a lot of sector analysis in his presentation. Grayson Rose, also from StockCharts. He's going to give you his streamlined approach to finding the market's best stocks. Then we're going to have Dave Keller. You probably know Dave from the Final Bar. He's the host of the Final Bar at StockCharts. He is going to join, and he's going to give you the one chart to rule them all. And it's going to be a look at a lot of indicators and what they told us at the beginning of the year, what they told us throughout 2022. Should be a great presentation. And then I will wrap things up with the 2023 outlook. And basically for me, it's all about just putting the pieces together. I could find something bullish at any time of any year, and I could find something bearish at any time of any year. So if you want to be bullish all the time, you can always point to something. If you want to be bearish all the time, you can always point to something. I think what we really need to strive for, though, is to try to remain as objective as possible, put all the different signals together, stay grounded, keep some common sense, keep perspective. I'll mention that a lot this Saturday. Keep things in perspective. It's really important because I'll be honest, the media blows everything out of the water. They're trying to get clicks. They don't care about educating anyone. Really, you got to be careful because you will, whether you like it or not, or whether you admit it or not, you will get brainwashed when you are constantly being told that the economy stinks and that the stock market's going down. And these are all the reasons why. That's what you develop. Stay away from that. Look at the charts. We'll talk about that more on Saturday. So let me just show you the charts real quick. In 2020, this is where we were. I said we were going to go to 40-40. Little play on numbers there. MarketVision 2020 going to 40-40. Bottom line was I was very bullish. We had the pandemic. I wrote articles throughout this pandemic. I said this is cyclical. We're going back up. It's a healthcare crisis, not a financial crisis. There we went, right back up. Didn't get to 40-40. Pretty good call, though. 2021, we were at 3,700. I said 3,756. I said we're going to gain 1,000 points. My prediction was 4,756. We finished at 4,766. I was 10 points off. 2022, here was the S&P 500. Started the year, we went down 23% the first 6 months. I've got it on recording. I said on January 8th, we could lose 20 to 25% in the first 3 to 6 months. We were right there. Now, I did say I thought the second half of the year would be stronger. We got off to a strong start, and then things kind of fell apart, and we've just been pretty choppy since the middle of the year. But overall, again, I think that was a pretty good call. So we're going into 2023. I'll give you my predictions this weekend. What you need to do is go to earningsbeats.com, click on this virtual event. It'll give you information. First, sign up with your name and email address and join. And then you can go down and you can read about our sessions and a little bit more about us if you'd like. All right, earnings spotlight, really nothing to talk about. Earnings will come out later this month, so I'm going to skip that. And let's move on to the 3 you must see. So here we go, the first 3 you must see of 2023. And I'm going to give you 3 stocks on the Dow I think are starting to look really good. Boeing, look at the AD line. Look at the price action trending higher. Look at the aerospace group relative to the S&P 500, and Boeing has been leading the group. Definitely want to keep an eye there. The second chart I had for you is Amgen. Amgen AD line, awesome. Look at the breakout to the upside. Look, we've pulled back down near this breakout level, which is 255. And then we've got this gap support at 260. We're right down there. This pullback, actually not a bad opportunity here. Biotechs have been strong. So Amgen I like. And then the last one I'll give you here is Honeywell. Honeywell, look at it moving up. Look at its relative strength versus its peers. Peer group breaking out. Really like these 3 stocks to start off 2023. That's it for me. Listen, Happy New Year, everybody. I wish you the best in 2023. Let's try and navigate this market together. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.